Yo, that pump last night was insane. Did you see it? All right, take a look at this. All right. Let me bring it in. Alrighty, check this pump out. Actually, it's not a real pump. I just had to draw the chart in, this little one here, because, you know, Optima didn't update yet. So I don't have live data through Optima. So here is the pump from last night. Now, the reason why I'm doing this video, look, there's a very high chance that within the next 24 hours we're going to top out. Does that mean that the market can't go higher? No, we're just moving between the swings. Okay, so you see all these swings occurring here. A lot of swings here. And all I'm doing is just telling you or giving you some guidance on when these swings are going to top out. And there's a high possible chance that this market's going to top out within the next 24 hours. Okay, so this is based on, if you look down at the clock down here, this is based on obviously Brisbane, Australia time. And I'm expecting a turn on the 3rd. So we might get a little bit of a pump up on that 3rd bar. Okay. A little bit of a pump up on that 3rd bar. Just remember that this bar here that occurred is the 2nd. So I'm expecting 2 scenarios to play out right now. Okay, so let me explain scenario number 1. Scenario number 1 is a continuation of this. Okay, so we get that pump up, we get the close. Okay, so I'm just going to turn off this little Duvalaki thing here. We get that close, and then on the 3rd, so this is the 2nd. Okay, that's really bad 2nd, but that says 2, okay, 2 ND. On the 3rd, it's going to go up a little bit higher. Okay, it doesn't have to go anymore. Can break it by a lot. It doesn't really matter. I'm not worried about that. And then that's going to be the 3rd, okay, and it's going to top out on the 3rd. Maximum the 4th. The 3rd is what I'm watching. And then we're going to fall down. Now, it doesn't matter if we fall down into an inside bar or whatnot. We're looking for that trend change. Okay, so this could be the trend change, sort of what happens in here, where the market sort of runs up, hits the top, sort of travels sideways before moving into the next turn date. That is okay. Or we could get something a bit more pronounced, where we are heading into a top, and then basically we head down into the next turn date. It doesn't really matter which way it occurs. All that matters is that we're now approaching a top, and we need to be open to that top. Okay, so let me get rid of all this. So scenario number 1 is we move up into the 3rd, and we make a top on the 3rd. Scenario number 2 is that the 3rd bar comes in, we move down. Doesn't have to be deep, but that downwards bar, this is less likely to occur because of this large range here on the 2nd. But basically that downward bar creates an inside bar, or even a down bar. That's not likely, but I'm just giving you the scenario. And then this 3rd basically becomes an inside or a down bar, for then a continuation of the trend into the 4th and then into the next turn date. So all we got to do is we just got to track these turn dates. We got to move between them. Okay, that's all I'm trying to show you to do, is how to move between them. So all you are looking for is a movement between these swings, and you would be using your technical analysis to then determine what the directional bias is. The things that I show you are not to remove technical analysis. It's not to replace your Elliott waves. Whilst I show you that you can do some of these things without Elliott wave, without technical analysis, I'm giving you the other things that you don't probably have access to due to software constraints, or you're not too sure how to apply. So I'm giving you the thought process on that to show you. So let's take a look now at our cyclical curve, because as you can see, we have extra data here, and that comes out to, or covers almost all of the seconds. I'm going to open this up to get the latest data. 1 second here. Let's open this back up. If you're not sure how it's done, I'm just clicking the more, clicking from internet, clicking on Yahoo, going to symbols, double clicking Bitcoin, changing it to 60 minutes, clicking download, and then after that I'll click OK. Once that's done, I'll click OK again. So this should now update it to the latest set of data. And then we click calculate. These simple steps, that's all it is. And then at the end, once it's locked and loaded all these cyclical cycles that we're looking at, cyclical analysis, or the cycles we're looking at, and we can go ahead and tee it up. So now this is updated to the current data. Okay, so Bitcoin is currently trading at 94,320. Now this gives us a better curve, because we had data going way back yesterday. I think it was around here. We can see the blue line was topping out and then coming down. The red line was not sure what it was doing. It was coming down, I guess, into this point now that we have the data, and then moving up. But now we're going to reanalyze it based on current data, and the next call is for the market to fall. Okay. So is the market going to fall now? Well, what I'm going to do is I'm going to change it to Sydney time. And we can see that we're moving into the third. Okay, so this is why whenever I give you these dates, I'm kind of looking for Sydney time because I am, based in Australia. So the dates, you always need to give it at least 24 hours either side. Okay, that's just in general. So if I said the third, you'd be looking for the second to the fourth. Generally speaking, the third should hit. The third being, I guess, GMT 0, so it'd be later on in the day on the third, towards midnight on the third in Sydney kind of thing. Because we're about 10 hours ahead of GMT, okay? That Australia, roughly 10 hours ahead of GMT, and the US would be around 15 hours, so it's -5 hours or -4 hours from GMT. So that's kind of why we have this large range in time. So without that being an issue, the curve now, so again, just remember, Monday to Sunday is the period that we're watching for this week. So I'll go ahead and line that up. So that's this. So we'll be expecting the market to either A, top out on the third and then move down, having a third as the top, or the market kind of moves down and creates a third low. We need to wait and see how that moves. Because of the large swing higher, if this is going to be bullish, then the interpretation of the cycle would be that the third would put in a low. But for the third to put in a low, it actually needs to drop quite a lot. It actually needs to drop basically below the second low. Okay, so kind of down here, so it needs to bring back all these gains. And what's the likelihood of that? I guess if we're bullish, the likelihood of that is not very high. However, if we're still bearish, then the likelihood of that might be, still up there, okay? So the news that just came out overnight is that the US is pushing forward with its cryptocurrency move. I'm not going to get too sidetracked, but I just want you to know that governments cannot, they cannot win the natural laws of the cycle. They either move against them or with them. Right now, the US is moving forward very, very strongly with the cryptocurrency market, and they're trying to really push it into the government. So they're having a crypto summit, all that sort of stuff. They're really going forward with this whole idea. The only downside is that this is creating a hype for cryptocurrency, okay? This is creating a hype for cryptocurrency at the wrong point in the cycle. Let's say, for example, the government did this back around 2015, okay? Or even in 2021. That's a very different time period to going into 2026. There's always going to be a sucker. There's always going to be a cause of the next great crash. And I remember when I worked at Agora, I used to speak with Callum. We used to, hypothesize on what could be the catalyst of the next crash and what's likely to occur. And one of the ideas that we sort of threw around, was around 2019, was that if the US dollar is going to collapse, it makes perfect sense for the US dollar to collapse in 2026, or for it to occur, or some sort of issue to occur in 2026, because then that would issue in the central bank digital currencies, and that would be working on time. There's this big market crash, US dollar's sinking, all the assets are sinking, and then we have basically the world banks come out with digital backed central bank assets. I should say crypto backed digital bank assets, and that would be basically the new way forward. However, as time has gone on and we see that the Trump administration is pushing things like Ethereum and Bitcoin, etc., and they wanted to create their reserve, well, they're basically buying at the highest prices ever. Now, like I always say, the rules of the game have changed, because this used to be the poor man's way out of, central banks. But what we see now is that it's no longer the poor man's way out, it's now the rich man's way in. And that's very, very different. So the rules have changed, and I don't know what the new rules are. I'm not quite following it in that sense. I just don't know if this is going to turn out right. And that's just my thought process. Okay, so let's go back to the cycle. I won't waffle anymore. Cycle's pointing down. I'm not too sure how steep that's going to be if we're creating a low. It's quite a large drop-off relative to the remainder of the week. However, it is signaling a possible top. If a low is going to come, then I'd be watching for a low to occur on the 5th. Okay, that would be the next date that I'd be watching for a low if the top is going to come in. So it should come up, maybe breach it just by a little bit, come down and breach this one by a little bit. If I move it to GMT again, we're a little bit out, okay, so it's signaling a low with GMT to occur around the 2nd to the 3rd, and then the 5th has this minor low here. So we'll have to see how that goes. It would just make more sense to me if this kept going higher for a little bit longer, made a top maybe in 12 to 18 hours. That would be the sensible reaction here. And then made a low on the 5th and then moved up into possibly the 7th to 8th time period. The curve and the dates right now don't give me any clear directional bias, but I would follow them for the curve, but I don't think the timing is going to be as expected. But let's see how this plays out. This is now our updated curve with extra data. So expect the market to fall before advancing would be my suggested output. Everything else syncs up regarding the curves now. So as we can see, I can't draw on the screen, but just follow the blue line. We get a single inversion between the red and the blue right here. One of them will dominate, one of them will not. They both sort of make a top on the 4th before trending down into the 5th. Okay. They then move up into the 6th. Now if I was to change the time period on this, I would say that we go down into the 3rd, up into the 5th. Okay, so the 3rd makes either a top and a bottom at the same time, so an outside bar, or just falls up into the 5th. So we can break the top, or when you can not break the top. This is not a price predictive model. Okay, this is just a curve predictive model. And then we move down into the 8th. Okay, that would be the ideal situation. And then we move upwards. Okay, we're moving upwards into the next turn date, which would be around possibly the 12th to the 15th time period. I'll catch that one on next week because that'll be out to next week's curve, which, just remember, we cannot rely on this any more than 1 week because the curves start to fizzle out. Okay, they get less accurate as time goes on. So that's the update. This is the curve, and we get a bit more clear of a picture right now. Now, before I cut this off, there was one thing that I wanted to go back to, and that was the BTC halvening scenario that I gave you last time. Basically, the whole point of what I told you last time was that we're dropping out here. Okay, so all these are coming down now. We can see, though, that after we come down, 2 of them basically push up again. So this period here, which is around the end of March, pushes up, and this one from April pushed up. So they do have these secondary rallies, all these rallies higher, counter trend rallies, I should say. And if Bitcoin does not break the tops, if it does not break the tops in this time period, then the bias could still be down for a little bit longer. So the final thing that I was applying for Bitcoin was the square of 9 chart, and I have the static square of 9, which is on the right hand side, sorry, right to left, and then on the midpoint here, right in the middle here, where price action is, I had the dynamic square of 9 playing out. And I was looking for the clusters. The first cluster that I was watching for was around the 25th, where we kind of got this range in here. Okay. The second cluster that I was watching was around that 78,000 mark. Okay, this is where the second range of clusters came in. So as you can see, price did come down to this cluster down here before advancing. All we want to do if we want to flip this, and we want to find the next dynamic square of 9 levels, is we reverse this process and we move upwards. Okay. So I've just got to now align it. So I'll show you what setting I was using. I was using a price unit of 100. So if we change this one from 10 to 100. Now we see that there are a few clusters occurring right now. We do have the 220-degree square of 9 level occurring, and that is occurring at 94,970. If we look at the current price action, we can see that it is 94,000, about 94,450. So we're just shy of a repeat right into this 220-degree period, which if it find resistance, that would be bearish, at least temporarily. We have 95,000 from the down move at 120 degrees, and don't worry if you don't understand this fully, just watch the numbers, that's all you got to do. And then we have 120 degrees at 93,000, so we're definitely in this cluster period right here. I'm going to draw a rectangle around it. Okay, so this period right here would be clustering with price. What else do we have? We can see that we have a 360 degrees up here with 99,000 pretty close to it. And then the next cluster area would be up here. All right, now the strongest points for tops and bottoms to occur, I'm going to tell you now. The strongest points would be the first 180 degree rotation to the up move, okay, 83,000. The second strongest point would be 95,000, which is another 180 degree rotation out. So 300, this is the 360 degree move, 180 to 180. And as we can see here, this 360 degree move here is basically 360 from 0. Does that make sense? So each time we go out to the same degree, we're moving 360 degrees out forward. So 95,822 if a top comes in around this period, okay? Definitely one to watch. And then the turn date would be the 3rd. So what I would do is I would move this, or I'd copy this, and I'd go up to around the 3rd period. And I'd basically pop it in here. And I'd be watching for a top to occur around here. Let's see what occurs if this pushes forward or starts to stall out. And that's what I'll be doing. And then if it does make a top, then I would move this and I'd find the next cluster or square of 9 levels down, and I'd basically pop it down to the around time frame of the 5th. So we got to find out where the top is so we can apply our dynamic square of 9 to it and move it down to the 5th. Anyway, just some more information and some updates on the catalyst that's playing out right now.